Larry takes your phone calls now, toll free at 1-877-927-6648. This is the Futures Hour. Here's your host, Larry Pesavento.
Okay, good afternoon, folks. It's the Larry Pesavento Futures Hour for TFNN. If you have any questions, it's 877-927-6648. And this morning we're going to have our friend Rich Anderson from Anderson Capital Management. Rich has been my friend for just about 40 years, I believe, because he was, I think, 12 when he started trading. And I was a little older than that, but not much. And he has some things. He also has some trading ideas that I think that would be apropos for us. And we've got, they got that corn market that we've been waiting for a long time, and we're in the harvesting season now. And we have that longer cycle that's due out there in just a couple of weeks. It could come at any time, and we're right near a 786 retracement, so we're going to take a look at that. He also wanted to talk to us a little bit about some of the political things that are happening in the agricultural environment that he's closely held close to, because he's not only a farmer but also a rancher. I don't know, is Rich there yet?
Hi.
Hey, Rich, how you doing? Why don't you tell us a little bit about this cattle thing, because that really brought my interest this morning when we chatted about it.
Well, a friend of mine who writes a letter was talking about politics, and people are free to comment back, and one person said, should only talk about cattle. And he wrote that, well, you can't really talk about cattle without talking about politics, because the government controls the survey numbers and how they do the surveys, which come out in the cattle reports and hog reports. The food safety and meat inspection, the government regulates all of that. The environmental regulations, as far as what you do with your waste and how far your feedlots are from water. They control the markets. They tell you, how these things can be sold and how you'll be paid. The trade policy is a huge impact. Free trade is a misnomer. It's fair trade is what you're looking for, because every government protects around the world protects. So we need fair trade, and the government's just everywhere you look. And I give you another example. They were interviewing somebody from Staples on CNBC the other day, and they were talking about government interference, and he said, let me give you two examples. Every corporation above a certain size has to calculate what their CEO salary is as a percent of your average worker around the world. That's going to cost millions and millions of dollars for these people. And the other thing he said in the Dodd-Frank bill, and this one blew me away, that every store needed a lactate station. And so they called up the government to find out how big these lactate stations had to be, and nobody in the government even knew about this yet. So we're getting bogged down with regulation left and right, and people don't even think about it. That's just a little political salvo.
Yeah, I can. We'll get back to the markets, but that lactating station is yeah.
I told you that I'd try and look up a good trade that I think is a high probability winner. We're in the beginning of harvest, approaching the middle of harvest. By the end of next week will be the end of harvest. Will be moved out into maybe the 1st of November. But the bulk of the corn harvest will be done in the next week or two, because they got these big machines. So what the price of corn is in China. It's highly overpriced compared to here. We expect there'll be some business from China. They bought beans this week, and it's their harvest right now too. So they typically don't buy during their harvest. But I'm looking at, buying like 640 calls, selling the 7 and the 730 calls, and selling the 580 puts, and that puts me long these corn either at roughly you'll get it for a credit. So you put your long these corn either.
Okay, Rich, do me a favor. You're going to buy the 630 call?
The 630, 640, either one of those.
Okay, and those are December calls.
Right.
Okay, and you're going to sell against that the $7 and
a $7.30.
Okay, and the $7.30 and $7. Now you're going to just lock in 70 cents then, basically. That's going to be your limit you can make on that.
Right, and then and your risk is 70 cents above your higher strike price, which is $7.30. So your risk is at $8.
Mm-hmm.
But I'm also going to sell the 580 put. Mm-hmm. So I'm actually taking in a credit. So if corn is between 630 and 580, I still make money. I'm long futures below 5. Well, depending on how you get the trade on, below 575, let's say. Okay. And my risk is above 805.
Okay, let's step back because, a lot of our listeners are new to futures.
That's the way these guys structure trades,
Yeah. What's the cost
I can't make any personal recommendations, but, that's the way guys would structure trades.
Okay, what's the cost of the 640 call right now?
I thought you'd ask that, so I thought I'd better get a screen up. You could probably get those done right now for 34 cents.
So that's around...
The 640, the 630 calls, 34.
So it's going to cost $1,700.
38 cents. 38 cents.
Okay, so that's $1,800.
Right. The 580 put you can sell for maybe, let's say 16 cents.
So you're only putting up $200 for that?
Well, no, there's margin on the trade. There's span margin. And then you're selling the $7 call, and you can get those sold for, let's say, 15 cents, and you're selling the 730 call, and you can get that sold for, let's say, 10 cents. So you're taking in, 15 cents, 10 cents, and 17 cents, and you're paying 38.
Okay, what I'm going to do for our listeners is I'm going to do the math on this.
Yeah, do it. Put it up on,
put it up on the screen and see how it looks to them and take a look at it. Basically, what they're doing is if they're buying let's say they're buying a 640 call, in other words, corn at 640 a bushel, and they're willing to pay $1,800 for that. They basically become a farmer for 3 months. Isn't that right, Rich?
They become a farmer for 58 days. November 25th is option expiration.
Okay, and the price of corn now is roughly $6.30, so that's an in-the-money call. So it's right, it's pretty much like trading the futures, except that you have a limited downside risk and you have a maximum upside potential if you do the call itself.
Right. If you just do the call, it's limited risk, and people like limited risk. But
okay, that's correct. Now, let me ask you a question, Rich, because I know you're heavily involved in these calls. When the market is, having one of these reports that come in.
They have a big
really
one tomorrow
crazy.
And a big one on October 25th.
Oh, so there's a big one tomorrow.
12th.
Okay, all right. Well, which one is the bigger? The October 12th is the biggest, right?
I think the 12th will be the biggest.
Yeah, that's the USDA crop production, isn't it?
Right.
Okay, so we'll take a look at that tomorrow. We'll watch that, and maybe if it sells off, we might be able to look at it. I've noticed that this is the largest correction we've had in corn in almost the whole year. And, we've dropped just about $1.50 a bushel, which is quite a bit, and we're coming into this cycle. And so this is looking very interesting as a potential for a, low-risk trade, and if you want to be involved in the commodity markets. You're still basically very bullish.
I think since corn's started its bull market a couple of years ago, I think there have been 4 corrections, three of them, this one included, are in the 15% range, and I think one was in the 20% range. And I think they pulled back to, not that I use, but I've read they pulled back to the 200-day moving average, and actually we violated it yesterday by a good amount, so we need to get above that. But, it's a seasonal time of the year. It's harvest time. The reason you typically make your lows at harvest, by the way, for those that no farmer has enough bin space to store all of his grain. They almost all of them have some bin space, but not enough to store everything. So they always have to sell what they can't store.
It's our largest crop in the whole country is corn, isn't it?
Right, and that's the one thing where we're still the world leader. Soybeans, Brazil's gotten to be a major factor. They're knocking on our door as far as how much they produce versus us. But corn, we're still the only game in the world.
Okay, that looks very interesting. All right, well, we'll keep in touch, and then what we'll do is maybe on the 25th we'll try to have you, back on the show. I'll be in the United Kingdom, but we can still do a radio show from there, so I'll try to get in touch with you, and we'll see what that big report will be on October 25th.
Yeah, so whenever you see the retracements right and, whatever technical indicators a person uses, because the key thing is your risk tolerance. that's the reason people are successful, is because they stay within their own risk tolerance.
Yeah, and to be a farmer, if we can get these things down maybe at around $1,200, that'd be a really good price, because you could be a farmer for basically $600 a month, holding a farm of about 250 acres, and that might be a good thing to look at. And your profit would certainly be, even a retracement back would make double that. So that's a good idea.
That's
all right,
what
listen,
I'm working on.
Yeah. Hey, thanks for calling in, pal, and I'll be talking to you soon. Okay?
Take care.
All right, you bet. Okay, folks, what I'm going to do is I'm going to towards the end of the day, I'm going to go through this a little bit slower, because Rich is really involved in this quite a bit. And frankly, I don't do much in puts and calls. I know what he's doing there. He's putting on a call spread. He's buying one call, selling another call, taking the premium in. And as long as the prices go up, he's protected up until 80 cents a bushel. And if he's willing to, 80 cents a bushel is roughly $4,000. And if he's putting up $1,800 to make $4,000, that's 2 to 1. And he's getting back $800, so that means his downside risk is 1,000. So he has a 4 to 1 risk reward ratio on this trade. And if it doesn't work, he can only lose $1,000. So that's not a bad trade to do. But what we're going to try to do is to go through some of the timing on this. And what I've done is I posted the December corn chart that we've been watching for so long, and I've always commented. I said that this is probably one of the most beautiful technical charts that you could ever find, because it has the cycle work that people look at. It has the ABCD structure. It has the ratios of the Fibonacci summation sequence. It shows the harmonic nature of corn. In other words, these last corrections that we had, the first three were perfectly equal. The next one was 2 times the other one, and the one that we're having now is equal to the one that we had before. So there's all kinds of things that are coming in to corn to tell us that we should be buying it. And now there's a report tomorrow. So you either take the risk and buy it into the report and risk a negative report on a possible gap down, or you wait till after the report and see what happens. Now, if you look at this, you see the market has been down almost the whole month. It topped sometime around the 1st of September, and here we are at the end of September, so it's been down almost a whole month. The same thing happened back in July. I believe, was it July? It could be August. It might have been August. Yeah, it was July. In July, we came down from the month of June into the July. We got to do a commercial here, but when we come back, we really need to look at this corn. And the more I look at it, this is a real buying opportunity in corn, folks, I think. So we'll be back, 877-927-6648. If you have an ETF on corn, let me know.
Are your cable rates rising? Tired of being pushed around by your provider? It's time to push back. Cut the cable and get Dish Network installed with absolutely no equipment to buy. Here's the best part. Packages start at just $24.99 a month for an entire year. That's right. Call now and get Dish Network installed free. Plus your choice of HBO, Cinemax, or Stars free for 3 months. If you call in right now, Dish Network will also throw in free HD for life. PMG Dish, a Dish Network authorized retailer, is waiting for your call and can have you watching TV as soon as tomorrow. Call 800-565-8010. Imagine all your favorite movies, sports, and shows in crystal clear digital quality for far less money, and you won't have to deal with the cable company anymore. At only $24.99 per month, they're practically giving it away. Call now for full details. Call 800-565-8010. That's 800-565-8010. Again, 800-565-8010. Limited time offer, prices, packages, and programming subject to change without notice. 24-month agreement required. Cancellation fees, auto pay, and paperless billing and other restrictions apply. Call for details.
TFNN is proud to bring you the cutting edge of newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today. Click Investments and Newsletters and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Direction Shares Leverage ETFs fuse the benefits of exchange-traded funds with the innovation you expect from Direction, providing investors with opportunities to magnify their short-term perspective, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. Direction Shares, ETFs to the power of X. To learn more about Direction Shares, click on the Direction banner on the front page of TFNN.com or call 866-476-7523. There is no guarantee that the funds will achieve their objective. The ETFs are not suitable for all investors and should be utilized only by sophisticated investors who understand short-term trading, leverage risk, consequences of seeking daily leverage investment results, and intend to actively monitor and manage their investments. An investor should consider the investment objective, risk, charges, and expenses of Direction Shares carefully before investing. The prospectus contains this and other information and can be obtained at directionshares.com. Please read the prospectus carefully before investing. Distributed by Foresight Fund Services, LLC. Are you looking for some extra cash to help pay off some of your bills? Let Tiger Metal Exchange convert your unwanted jewelry to cash. We pay out 80% of the market price for gold. Our payouts are the highest in the industry, more than double our largest competitors. And we've created the safest, easiest, and most straightforward process for converting your jewelry to cash. Log on to TigerMetalExchange.com and get your free scale, your free eye loop, and get the cash you deserve now. We provide a free online calculator that converts your jewelry to cash at up-to-the-minute spot prices. We insure your items for up to $75,000 per shipment free of charge. We videotape the entire valuation process so that you can view it online. You can call us toll-free at 866-618-8888 or log on to TigerMetalExchange.com. Let Tiger Metal Exchange put more cash in your pocket without ever leaving the comfort of your home. Join the list of thousands of satisfied customers and go to TigerMetalExchange.com. It's the only click you need to make.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, we're back. We're talking about corn, and we have a call from Roger in Washington. Is that D.C. or the state?
Oh, no, the state.
Ah, thank God. I don't have to talk to a politician. What can I do for you, Roger?
Yeah, the ETF I look at is the CORN.
Yes, that's exactly what it is. I thank the person that brought that to my attention. I mean, that's unusual that they actually bring in an ETF that describes what it is. So
what it is, yeah, right.
Yeah, and it follows the corn chart just very, very nicely. It shows that we're coming into a 786 retracement now. And then we have the report that's due tomorrow morning, which will affect it. It'll gap one way or the other. And so if it gaps up, you're going to have to pay a higher price. Or if it usually gaps up, you wait for a little bit pullback. If it gaps down, I'd be looking to buy the corn down another 20 cents if we could get corn 20 cents a little bit lower. Now, what I mentioned with Rich, and he's really into puts and calls, and it went a little bit more than I wanted to. But if you were to buy the call is 640 that we're looking at, and if corn goes down, 20 cents tomorrow, you could go and buy a 630 call, which would be even cheaper, and it would still give you 2 months to look at it. So that's what I would be looking at. Would it be to buy the 630 call, and it would be a little bit more expensive because. No, that's right. 630 call would be, it would be a little bit more expensive because it's farther into the money. So if you watch that 640 call, if it goes down below, if we get a 20-cent break in corn or anything, 10, 20 cents, that's what I'll be looking to buy in the first half hour tomorrow is to watch that corn trade. And then what I'll do is on Monday, I'll show the folks, what happened with it. And but if you have to assume the risk, remember you're going to have to risk about half the premium of the call. So if you're going to pay about $1,600, be somewhere between $1,400 and $1,600. You have to be able to risk half of that, which is around $700. But remember, your profit objective would be 3 to 1. So you have a 3 to 1 profit objective and a 1/3 risk objective. So that's a pretty good thing. And with the puts, you can get out of those. With puts and calls, you can get out of those easily also. So it's not a problem.
Yeah, basically, I don't do the puts and calls. What I'm looking at is just the ETF equity chart. And back on July 1st, it broke the 50-day moving average. It was the low was 39.69, and it closed at 41.14. And now we're looking at 42.06, and it's below the 50-day moving average. And it's hanging right on, it looks like a support level of, 42.22.
Yes,
so
and not only that,
and it's hanging right at that support. So what I'm looking at is just, a slight move to the upside, and, maybe, volume picks up a little bit and, kind of go from there.
The volume has really sold off a lot. There has reduced a lot during the correction we've had here in September, which is a good sign. It's not heavy selling coming in, much like we had in gold and silver and platinum and some of the other things. So that's another good sign. So the only risk you have is you're going into a crop report, but usually they know pretty much by now what the report is going to be, because there's not much of a weather factor unless we start getting some frost. So I think that's something to you have to risk something. You have to assume some risk when you're doing these. So I think today would be a good time to look at those calls, and we'll see what happens.
Yeah, well, I'll take another look at it maybe later in the day or maybe first thing in the morning and see kind of what's going on with it.
First thing in the morning. That comes out real early, long before the stock market opens. That report comes out at 8:30 New York time, an hour before the opening. So by the time, a half hour after that, the big grain firms are giving an idea of what the opening indications are for the the corn, grain, beans, wheat, corn, and all the other things. But this is this has had a like you say, I don't use the 50-day moving average, but it's done the exact same thing 3 times. I don't see why it'd be any different this time. So we'll have to keep an eye on it.
Yeah, I don't either, unless they've had a really bumper crop. I know out here, the weather's been great for it. So.
Well, you got to think about Indiana, Illinois, Iowa. That's where you got your big fan. I grew up in southern Indiana.
I thought it was pretty interesting him talking about, they only have so much storage
space.
That they can use, and so it looks like what they've been doing is selling, quite a bit of it already, and maybe that's why it's dropped below the 50-day moving average like it has, as it has not in prior times. So,
this is just a normal cycle selling into the harvest, Yeah,
I'm kind of looking for it to go up. So.
Well, me too. So we'll see if we're both right.
Hey,
thanks for calling in, Roger. I hope to talk to you again someday.
You bet. Thanks, Steve.
You bet. 877-927-6648.
This is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stock placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com, under newsletter, hit the Market Insight tab for your 2-week free test drive right here, right now.
Homeowners, did you know a burglar could break into your home and get away in just 5 minutes? A locked door may not be enough to keep a thief out of your home. Think about what you can lose, and then think about this. Now you can get a free security system monitored by ADT, the leader in home security. Pick up your phone now and get free hardware, free medical and fire alert, and free activation. It's an $850 value. Just call Protect Your Home, your authorized ADT dealer, at 1-800-949-8207. You'll get 24-hour protection, and there's no cost for parts or activation. So call now about a free security system monitored by ADT. Call 1-800-949-8207. $99 installation charge. 36-month monitoring agreement at $35.99 a month. Call for terms and conditions to this offer and protect your home license numbers. Call now. 1-800-949-8207. That's 1-800-949-8207.
Great Basin Gold is a mining company engaged in the exploration and development of two emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin Burnstone Mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Rand Basin in the last 30 years. The Burnstone Mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister Mine in Nevada became fully integrated in the fourth quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, folks, we're back, and we have a call from John in Philadelphia. Are you there, John?
Hello, Larry. Good to talk to you.
How are you? Good. I'm good today. Thank you.
Say, Larry, I wanted to ask you about the weekly DAX chart, but before I do, if you'd like some further just info into the corn subject, I'd be happy to give you something that I didn't hear this morning.
Go ahead, please.
Regarding the fundamental data, tomorrow, Friday at 8:30, is a USDA report coming out. Let me explain that this report is the data for stocks of corn left as of September 1st. And this type of report, they call it the grain stock report, comes out just 4 times a year, always the last day of each quarter. And the October 12th report that you and Rich were speaking of, that's the report in which the USDA will estimate the crop size. So they're two different things. So I just wanted to share that, number one. Number two, regarding tomorrow's report, of course I have no knowledge of what's going to come, but I wanted to alert you and listeners that I would not put it past any reaction, including a limit up reaction in the corn price. And let me explain why. The corn stocks report coming out at 8:30 tomorrow produced a limit down reaction June 30th. And back at that time, one of the key items in that report that just shocked traders tremendously was this. The USDA reported stockpiles of corn, and this was back, 1 quarter ago, 90 days. Stockpiles of corn, they estimated to be much, much higher than anybody thought. And when one dissected the reasons for that, embedded in the USDA estimates was an estimate that the amount of corn being fed to pigs, cows, and chickens was down by like 40%. And anybody who looked at that particular assumption, and that was the pivotal assumption, anybody who looked at that assumption said, this just isn't real. It can't be. And yet, there was a trader reaction, of course. Mm-hmm. There's some speculation amongst people who know this stuff much better than I that the USDA will flip that estimate on the report coming out tomorrow, namely estimating that the amount of corn fed to cows, pigs, and chickens is dramatically higher to basically reverse, if you will, the mistake, quote-unquote, that they made back on June 30th. If that's the case, Larry, corn could be up 30 to 45 cents tomorrow. So I'm not forecasting that, but please just be aware of that kind of possibility.
Well, this is the one thing we want to be aware of with knowledge of things like that, John, that you can see the volatility that's going to happen no matter what that report says. But it's important to to know that these reports occur because, frankly, you should wait till the day after the report. But when a report is like this and it's right at the price, it's usually the time to buy it. When the pattern is completing. Now that's what we will be doing. We will be looking to. In fact, I already did it, and we will buy. I just bought some Dees corn for $6.30 a bushel. But if it opens down sharply, then I have to manage it a little bit differently. If it opens sharply higher, then I also have to manage it that way. But I have to accept the risk. Going into report like this, and this is what we will be doing. But thank you for the information, right. John.
Yes. Larry, I wanted to ask you...
stay with me. We've got a commercial, John. Stay with me. We've got a commercial, pay some bills, and then we'll take your second question, okay?
Thank you.
You bet.
TFNN is proud to bring you the cutting edge of newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today. Click Investments Newsletters and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, I just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now, did you sell us jewelry or did you buy coins off us?
Yeah, I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, folks, we're back, and we still have John on the line. Are you still there, John?
Yes, thank you, Larry.
What is your next question, or you wanted to share something with us?
No, I wanted to ask your opinion, sir. The DAX. This morning, Tom and Steve were speaking about just a short-term pattern. It was failing on the dailies. Mm-hmm. But the DAX weekly chart, it's really plunged. It's retraced fully 61% of the 2009 to 2011 rally. And I'm wondering what you're seeing when you look at that, if you see any intermediate-term speculation coming up there.
Well, what I did, for the Tiger TV folks, I posted the DAX chart, and it shows the big drop that we had, from July into September, and it is a huge drop. There's no question about it. It made a three-drive pattern mid-July, mid-August, and then late August, and then in September when we bottomed in Germany. It was around the 16th, I believe, but it shattered that August 9th level quite a bit, and now it's in the process of making an AB equals CD, retracement. And I think we could, rally maybe another few hundred points in the DAX, and then, but the trend is certainly down. I don't think there's any question that the trend has turned down. And if we go below those September lows, which were around 5,000, you can just about figure it's going to go lower. John, just about everything in the world. I posted a chart on Shanghai when I started the show, and the Hang Seng in Hong Kong looks even worse. But every stock in the world is bad. Some are worse than others, but some look absolutely horrible. And something is out there. There's something sinister. I don't know what it is. But, I have some ideas of what it might be. It could be with the euro or whatever. But anyway, this is what's happening around the world. It's not just one place. And we didn't start it. It started in Asia and then spread to Europe, and then we took the back end of it. So that's how I see it.
Gotcha. Thanks so much.
Okay.
I do appreciate it.
You bet. Thank you. We've got a call from Danny in Atlanta. Are you there, Danny?
I'm here, Larry. Hi.
Hi, how are you? What can I do for you, my friend?
I'm doing great. Last night we made that 618 retracement in gold, and but the gold stocks still look extremely weak. Based on what you're seeing in the HSI, or the HUI, excuse me, what are you expecting going forward?
Well, the retracement Danny was talking about, as we were looking at the 30-minute chart in gold, and we said that they would make a big AB equals CD pattern, off of the low that we made at 1540, and that low came in exactly at the 61% retracement overnight at that 1590 level, and it held up extremely well. And as long as that holds up, now we haven't rallied very much from there. We've only rallied about $35 an ounce, which isn't very much. But long term, if a person looks at the long-term chart and just remembers that real wide-ranging bar that we had coming down, and if you compare that with the wide-ranging bar that we had coming down in silver on April 23rd, it basically says the metals are over, kaput. And if we fail below this 1540 level in gold, that sets up a whole lot of extra selling to that level. But silver is still $4 an ounce above it. So right now it's just testing the bottom. and I think it was in a buying mode at that level, and that's why I did it. I mean, it was nothing mysterious to what I did. You know what I do, Danny. I just look at the retracement that we rally from the 26th to the 27th, and then I follow the AB equals CD pattern down into the early morning hours of yesterday, and the market stopped exactly at the 618. The number was 1590, and it went to 1587.5. So it was spot on, and then it's rallied up and made another 61% retracement intraday here. So it's still got a chance to go to the upside. If it goes below that 1590 now, you certainly don't want it. But right now, it's looking okay.
So how will you manage this trade based on? It sounds like longer term you're still bearish, but
oh yeah, longer term I'm bearish. If I could get the market to rally to make an ABCD off of this thing, which would take us from the low down at 1540, and then we rallied up to 1680, and then we came down to the 1590. If I could get that thing anywhere near 1725 an ounce, I'd run like a scared rabbit. Just get out of it and look. In fact, I would look to be short there because that would be a Gartley sell pattern on the downside, and that's the ideal situation to do. So that's the main thing. You have to respect those long, wide-ranging bars in gold. I mean, this is what was telling us that something was wrong when we were watching the tops in silver form in April. We were saying the open interest was dropping. The volume is dropping. No new players are coming into the market. They're raising the margins. Bullish consensus was like 98%. Yet people over and over again just don't follow these things because of the fact that greed brings in complacency. It doesn't bring in fear. It brings in complacency, and that's why they get hammered so bad. And with those wide bars, this thing could really take a hit. You could see gold at 1,200 without any trouble at all.
Based on the pattern we had in the HUI, do you have a target for that?
Sure. Let me take a quick look at that. That's the gold bug index that really showed that this was the thing that we're at the 786 of one number right now, and I see that the HUI actually took out the low of yesterday in gold, which is very unusual. That means the gold stocks must be incredibly weak. Is that correct?
Yes.
Yeah, that could be another reason. And then the XAU at the same time, had the four tops that were, going down instead of going up. And so I'm thinking that if this HUI doesn't hold the 1519 level, that looks like about the low today. That was the 786 coming off of the low on June 20th. If it doesn't hold that, if it doesn't hold today's lows and closes below that, it would be a very, very negative picture. And if we take one more thing into account here, Danny, if you'll stay with me, and we'll take a look at the XAU, because this is the one that had been making lower highs all along and was telling us that there was something wrong. It's already broken below those points. So this is telling us that there's a great deal of weakness, that is here in these markets, and all we're trying to do is to get to some of them. And let me straighten this out just a tiny bit, and you'll see that we had the, three lower tops. Stay with me, Danny, and we'll do a commercial, and then we'll be right back.
If you're in the market for a jumbo preferred non-conforming loan anywhere from $417,000 all the way up to $3 million, and you have a FICO of at least 720, then Everbank is your answer. As a direct lender with processing, underwriting, and funding all under one roof, Everbank can offer the most competitive rates, greater efficiency, and shorter closing times. Now is the time to act. Everbank offers fixed terms of 10 and 15 years, as well as adjustable terms of 5, 7, and 10 years, including interest-only options on primary residences. For more information, call Everbank today at 877-471-5970 to talk with a member of their concierge team that will walk you through the variety of loans they offer. That's 877-471-5970, and let them know you heard this offer on TFNN. Everbank, 877-471-5970, 877-471-5970.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio. Therefore, we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
Studies show that 10,000 hours is what it takes to achieve outstanding results, unless you use the power of leverage. The power of leverage, folks, is key to attaining outstanding success in your trading and investing. I'm Steve Rhodes, co-host of the Money Masters with Tom O'Brien, seen daily at TFNN.com, and author of Mastering Probability, a daily trading and investment newsletter. Let me take your trading to a new level, a whole new level. Let me teach you the secrets that the real Money Masters use each and every day to produce consistent financial results. On top of that, I'll transform your life in ways you never thought imaginable. You'll overcome hurdles like an Olympian. Here's the beauty. I'm so certain that I'll transform your life. I'm giving you a 30-day unconditional money-back guarantee. Time, folks, something you'll never get back. The time is now to take action. Go to the homepage of TFNN.com and order Mastering Probability. It'll change your life forever.
Hi, folks, this is Tom O'Brien. My new book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, is for sale at Amazon.com for only $18.40.
Now, back to the Futures Hour.
Okay, are you there, Danny?
I'm here, Larry.
Okay, as far as the XAU has already broken below the June lows, and it's already taken out the lows that we made, when the gold was making the 1540. That's the first sign of really problems arising. There's another really huge one. If you remember, about a week ago, we were talking about the platinum. It finally came down and made a equal price with gold. That's the first time that had happened in, I think, since the the early 80s, around 1980. And now platinum is $100 an ounce cheaper than gold, folks. I mean, platinum is an industrial and a super jewelry metal because it's so hard. But this is telling you the demand is really bad for some of these things. So this is why you've got to be just so incredibly careful here. That's for sure. I hope that helps, Danny.
It does. If you have time, can you talk about copper? I mean, it looks really bad.
Yeah. Copper is really starting to. It has to hold that 310 level. That's a major point. I put that chart up several times over the past several days, and I always put it in a newsletter because the price of copper, based on where it was in 2008, is very similar on the weekly charts to what we have now. And we've hit that 310 level twice now in the last couple days. It's held, and I think that if it fails, then you'll be able to do it. I'm going to put it in for Tiger TV now, so you'll take a look at it. That the moves were just like that in 2008 when copper broke below $3.15 a pound in 2008. It dropped all the way to $1.20 a pound. So just keep an eye on that 310, because if we lose it, that market's going to go lower, probably pull stocks and everything else with it. Hey, thanks for calling in. Hey, I want to make an apology here to you folks, because when we were chatting Friday. Today? I lose track of my days. Yesterday, Wednesday, we were talking about the Rosh Hashanah, Yom Kippur, Hebrew Bible cycle, and I said buy on Rosh Hashanah, sell on Yom Kippur, and that's the opposite. It's actually the real Hebrew Bible. The Hebrew Bible doesn't tell you to sell on Rosh Hashanah and buy on Yom Kippur, but it should be selling on Rosh Hashanah and buying on Yom Kippur. That's what it says. If you go and Google it, Yale Hirsch and the Stock Traders Almanac has a nice recovery of what it looks like, and the statistics behind it and things like that. But what I do is I've always used it as the lunar cycle itself. In other words, to see what's happening on Rosh Hashanah, and if the market is down, you want to be a buyer, and if it's rallying into Yom Kippur, you want to be a seller for short term, and that's what I always worked on. So that's what. That's what I'm looking at as far as that. And I appreciate the folks that, bring this to my attention. That's one of the real advantages that I love doing this radio show, is that I get so many really great emails, and I get some that, chastise me pretty good, which sometimes I have it coming, sometimes I don't. But at least I learned something from some of these things. And this particular gentleman really pointed out, the discrepancy in what I said there, and I wanted to correct that. But the cycle itself is a pretty nice little cycle, and we ought to keep an eye on it, especially when we're coming in here to Yom Kippur, which will be at the same time when we're having this bigger cycle in October the 8th to the 10th. So we have to keep an eye on that. The corn basically is, we're going to have a report tomorrow. Monday I'll report on what the report said and what the markets did, and how that worked out. Also, I posted a chart in the den today from Chris Carolyn. Chris used to work for Bob Prechter when he was a young kid in the early 20s, and now he has his own thing. And he shows out how the new moons have been calling highs and full moons have been calling bottoms. And it's just another, person that's out there looking at some of this stuff, along with MIT and a few of us people that are out there next extra city or whatever. Listen, thanks for calling in today, and everybody have a wonderful weekend.